In today's episode, I'm going to teach you how I would begin trading if I were starting over today from zero. Now, this is actually a question that a lot of traders ask me. They'll say, Ross, if you were starting over as a beginner, how would you ensure that you made your way to trading with consistency and confidence without blowing up your account? We know the majority of traders lose money. So is the 9 out of 10 traders who lose, is it just the luck of the draw that some succeed and others lose? Or is it that the 10% who succeed are doing some specific things differently from the rest? I'm in a very unique position here as the head of Warrior Trading, and by putting all this content here on YouTube, where I'm able to see the comments from traders who are both very successful and from those who struggle. In fact, I've been able to aggregate all of what I think are the causes of failure down to 2 very specific reasons that people will lose money. In today's episode, I'm going to share those reasons with you, and I'm also going to share the 7 steps that I would take if I were starting over today. Okay, so the first step is understanding the phases. So step 1 is phases. I want to understand the phases of learning how to trade. Most beginner traders go through a learning curve that looks a lot like this. There's a period of what I would call a little bit of beginner's luck, where they make a little bit of money. Maybe you put $1,000 in the account and you end up going up to $1,500 or something like that. But then inevitably, there's reality. Reality sets in and you end up drawing the account down. Maybe you draw it all the way down to $200. Who knows? Maybe you even go negative and you have to add more money into the account to keep it above zero. So you keep adding money and adding money. Whatever the case is, this is sort of that early phase 1. And this is where the market is extremely humbling. You're going to learn all the things that you don't know about trading. You don't know how to use level 2. You don't know how to read candlestick charts. You don't know how to choose the strong stocks to trade. You don't know how to use hotkeys. You don't understand the market makers. It's this, that, and the other thing. And you feel overwhelmed. And for some people, this is where they bow out. They say, you know what? This is not for me. I'm out of here. So if we did a graph here, we'll do it in a different color. This is 100% of traders who begin on day 1. And now we're going to start tracking the drop off. So probably right in here, you've already lost 20% of all the possible traders. They've given up there. So now you're down to 80%. And this is, I'm just speculating, but this is where people are just giving up. They're like, you know what? I've been doing this for this period of time, phase 1. I'm done. I'm out of here. So they don't ever move forward to phase 2. Phase 2 is a critical and very interesting period where you are a break-even trader. Being a break-even trader is highly underrated. Now, I understand you're thinking, I didn't spend all this time studying the markets and learning to trade just to be break-even. But break-even means you're treading water. And if you're trying to learn how to swim, what's the first step? It's keeping your head above water. So if you can tread water, if you can hold your own, that is a really big indicator that you're building a foundation. Because what it shows is that you're able to make money. But what's most likely happening is every few weeks, maybe even once a week, you're giving back what you make. So how many of you have experienced that? You have 3-4 nice days and then you give it all back in one bad day. 3-4 nice days and you give it all back in one day. That's that break-even phase. And even if you're in that phase, but you're slightly negative, you're losing a little bit more than you're making, so you're kind of still losing, you're proving during this period that you actually do know how to make money. Because on the days you're green, obviously something is working. So this is phase 2. It's where I would say you're a break-even trader. Phase 3 is when you begin to pull away. You start essentially having longer stretches of green days before these red days. And your P&L just starts to slowly move higher. It's not anything crazy, but it's moving higher. Then you have what I would call phase 4, P4, and that is your first real drawdown after having some success. You have a little bit of success and then you begin to lose a little bit of money. So let's say you start with $1,000, you drop down to $200, you made your way back up to $1,500, and then you drop back down to $1,000. And this is the point, again, where through this area, you'll have more people that drop out. Maybe now you're down to 50% of traders, maybe even less, who knows, right? We've lost a lot of traders along the way just through this period of time because it's taking time and you're not seeing immediate results. The thing that's frustrating about trading is that the results come over time. They don't come right away. You have to spend time paying your dues, gaining educated intuition, learning the fundamentals of how the market works, the basic knowledge. So if you don't understand the phases, you're much more likely to give up early because all you see is, well, I'm just losing, and you have nothing to picture. You don't have any kind of vision of where this could go if it gets better. You're probably just visualizing it's just going to keep getting worse. But recovering from your first drawdown. So we have our first drawdown here, and recovering from that first drawdown is a massive, important moment. Because once you've recovered from that first drawdown, you now are beginning to do what I would call stair stepping up. You'll have some pullbacks and you'll keep moving higher, and you're now on your way to long-term consistency. You didn't know at this point right here that that was your turning point. You'll only know that in hindsight once you've kind of had this push higher, you've pulled back, and then you've recovered. So this is the area where I'm really interested in helping you guys, because a lot of you are still in P1. If you've even started trading, you're still at the very beginning where you maybe have had a little beginner's luck, or that luck is running out and you're right here. I want to help you go to the next phase. So if it's from P1 to P2 or P2 to P3, I want to help you make that transition. So the first step of learning how to trade is understanding and recognizing these 5 phases, P1 through P5. The 5 phases, because by understanding the phases, you can better identify with where you're at in your current journey. And once you understand where you're at, you have some context of where you're going. This is the problem for a lot of beginner traders. When they jump into the market and they just start losing money, they get frustrated, they get deflated, and they give up. And it's not necessarily that they lose a lot of money. They just lose enough where they're like, this isn't worth my time. So 6, 8 weeks, 2 months, 3 months later, they're like, I'm done, I'm giving up. And you know what? Some of those traders probably had the potential to become very successful if they had had the vision of understanding what this learning curve actually looks like. There's so many people out there that say, you can learn how to trade in 14 days, do this, follow this, boom, boom, you're done. And it's not like that. So I really encourage you to think of trading as a marathon, not a sprint. So you're going to have periods in this marathon that are very difficult, but you're also going to have periods where you start to feel like you're really gaining momentum and you've got a little bit of a tailwind, and all you have to do right now is maintain discipline and hold your course. Okay, so step 1 is understanding the phases of trading. Step 2 is understanding just the general concept of how trading works. So this is what I would call the education phase. So this is where you're gaining education. Now, I actually, just this week, I went up to Vermont to visit an old friend. I haven't seen him since, we couldn't remember if it was 2007 or 2008. So 15 years was the last time I saw this friend. He was my best friend when we were growing up. He lives in California now, but he came home to Vermont because he wanted to see his old neighborhood. So I drove up to visit with him. And as we were sitting talking, he was asking me about the trading stuff. And I thought, man, I wish I was recording this right now, because the questions that he was asking and the conversation, it was perfect for a beginner aspiring trader. And so what I want to do is I want to kind of give you the chance to listen in on that conversation. And so he was asking me questions like Ross, high level, what is it that you do? Like, I don't even really understand it. And so I explained that as an active trader, what I am essentially doing each day is I'm looking for stocks that have volatility. I'm looking for stocks that are moving quickly, that have the potential to move quickly. And I explained to him that typically, why would a stock go up 30% or 50% in one day? It's because it has breaking news. So what active traders are doing is we're trading volatility in the market, and it's typically associated with these breaking news catalysts. Now, during really hot markets, we'll find that we'll get heightened volatility even when the catalyst isn't clear. Like what we saw during GameStop and with all the meme stocks. Some stocks start just going up because traders are jumping on it, and that, in a sense, becomes its own catalyst, which is fine. But for my strategy, I focus on trading stocks that are within a very set price range, that have a news catalyst, that have a float. And all of this was the result of an extensive amount of, well, I guess you could say just trial and error in the market. So I'm going to put a link. It's going to be pinned to the top of the comments and linked to the description. And it's a link where you can download my strategy. It's my small account strategy PDF. And that's going to outline for you my stock selection process, where I'm getting in, where I'm getting out. and it's the high level blueprint for my strategy. So phase 2 is developing an understanding of the general concepts of how the market works. And, sort of here it's terminology. And of course, I've got a lot of breakaway classes here on YouTube that go into these various details. So we talk about terminology, we talk about volatility, supply and demand. We got to understand basic fundamental analysis. Fundamental analysis is understanding the news headlines and their context. We've got technical analysis. So I'll just do tech A. I should just do TA. I don't want to do tech anal. So TA, we'll just do tech analysis right there. This is understanding how to read candlestick charts. So if you don't know how to read candlestick charts, I have breakaway episodes that are full hour-length classes on how to read candlestick charts, how to read candlestick chart patterns, how to read supply and demand, how to perform stock selection. So stock selection here is another part of, so I would say the basics of how trading works, the right types of stocks to trade. So this is all of the kind of peripheral information that you need to understand. Trading platforms, how to actually buy and sell. And a lot of it is fairly easy to learn. Now, for me, I'm the type of person that I really like to learn by doing. So when I was learning how to trade, well, I kind of did what I'm going to tell you not to do. I funded an account with real money and I started pressing the buy button. But by doing that, I invariably had to learn things like the types of orders to use, the difference between limit orders and market orders, the difference, how to use level 2, like all of these sort of little nuances. And I learned those by looking at YouTube videos or looking at the documentation for the platform that I was using. So, I was able to pick up all of that information, but sort of throwing myself into the platform forced me to learn. Now, I'm going to tell you, you don't need to do that with real money. You can gain that same experience and all of that knowledge even by setting up a simulated trading account. We'll talk about that in just a second. All right, so step 1 is understanding the phases of trading. Step 2 is learning the fundamentals, the basics of how trading works. And for those of you that are in a place where you don't understand some of those, then I encourage you at the end of this episode to go check those breakaway classes where you can fill in those details. Number 3 is adopt a strategy. Now, the reason I'm using the word adopt a strategy is because I don't think in this day and age, it's honestly realistic for a beginner trader to try to create their own strategy from nothing. In fact, I think that would be a really inefficient way to approach trading. If you look at other businesses in the world, it's very uncommon that a business pops up that has never existed before, like an Uber or something like that. Usually most businesses are variations on existing businesses that are just done a little differently or a little bit better. Think about coffee shops. Coffee shops have been around forever. Starbucks wasn't new. They just took it to the next level. Dunkin' Donuts. I mean, you've got all of these different coffee shops. So I think of trading in a similar way, that the trading as a strategy, like the strategy that I trade, this is basically something I've spent a lot of time with trial and error developing. But there's no reason that you have to go through that same trial and error when I'm happy to share my strategy with you. It's like trying to reinvent the wheel if you go through all the trial and error. Now, if I put up on screen share here, you can see, I'm going to pull up my metrics here really quickly, because one of the things that I think is really important is that you make sure if you're learning a strategy and you're going to adopt someone else's strategy, that the strategy that you're learning is proven profitable. Because there's a lot of people out there on social media, on TikTok and Instagram and whatever else, talking about a strategy that they have, but then you ask them, well, where are the broker statements? Can you show me how much you've made? What are your average returns? And they don't have any of that. So I just want you to know, for those that don't already, I have my statements audited at the end of each trading year. So this is 2017, 18, 19, 20, 21, 22, 23. So you've got 7 years here of trading broker statements audited, where I started with $583 in my account, beginning balance. And the account has produced a total profit of $10,719,000 for an average monthly return of $127,000 and an average percentage return of 64% each month. I will tell you right now that my results are not typical. You shouldn't expect that you'll achieve the same performance that I achieved. However, if you want a strategy that actually works, I'm happy to share my strategy with you. Again, the link is in the comments. It's a PDF that you can download. You can print it out and you can just start testing it out. Now, that strategy is a blueprint. It is not enough by itself to make anyone a profitable trader. You need the rules, but you need more than that. So let's jump back to the whiteboard here. So when we talk about step 3, adopting a strategy, when you adopt a strategy, again, whether it be from me or from someone else, you're taking a strategy that someone else has proven is profitable and that it works for them. How do you know it will work for you? That's when we go into step 4, sim trade in a simulator, the strategy, right? Practice that strategy. Prove to see whether or not you have the aptitude and just the physical skills to trade it. Because ultimately, being a trader, it requires an ability to have the discipline to follow the rules of the strategy, but there are certain aptitudes that you'll need. You'll need to be able to execute orders fairly quickly. You'll need to make sure that the tools you're using, the platform you're using, work for the strategy you're trying to implement. So now I'm going to share with you the number 1 cause of failure that I've seen over my years for beginner traders. The number 1 cause is that they don't have a strategy that they're trading. They don't have a system. They don't have a set of rules. All they have really is a little bit of gut intuition. They're doing a little trial and error. And in other words, in my opinion, they're gambling in the market. So they'll throw a little bit of money on this stock, a little bit on this stock, but they don't set stops. They don't really know where to get out. They are really just following and chasing the market. It is not reasonable to expect that you'll be able to make a 6-figure, 7-figure annual salary in the market without first putting in the time to create a business plan. Because that's what a strategy is. It's a business plan. It's going to lay out for you the time of day you trade, the price stocks you trade, how you find those stocks, what chart patterns you like, where you're getting in, where you're getting out. If you don't have all of that written down, how do you expect to outperform some of the best traders in the market or the best hedge funds in the market? Now, I don't outperform some of the best. I'm in the top, right? I'm certainly in the top 10%. I'm a trader who's successful. I've made it, but there's obviously traders that are going to be better than me. Your goal is just to get yourself to the point where first you're treading water and then where you're starting to actually pull away, right? Phase 4 and phase 5. You need a strategy to help you get there. So while you're trading in the sim, you know what you're doing? You're beginning to generate your own track record of metrics. So when we look at my metrics here, I use this software called TraderView. Now this software is $49 a month, but this is software, and by the way, I don't have any affiliate relationship with them, so use them if you want, don't use them if you don't want. You could also just track your trades in an Excel doc if you want. But however you track your trades, what's important is that you track your trading metrics because those metrics become your sense of confidence. Now, for me, these metrics give me a tremendous sense of confidence. I've got $12.8 million right here in gross profit. I've got 68% accuracy. I mean, you could see all of these metrics right here. And you know what? If you're asking me, Ross, how did you choose the price stocks that you trade, right? Well, in my small account strategy PDF, I lay out the price stocks that I focus on, and my metrics back up the reason why I trade those stocks. Now, early on, my metrics looked the same, but the numbers were much smaller. And I also had some big losses in some of these other areas. What I learned to do was I learned to cut out the elements of my strategy that weren't working at all and double down on the areas where I was finding success. Part of sim trading is collecting data, analyzing that data, and then making improvements, making changes to get your trading better. Ultimately, the goal for a lot of beginner traders is to look at someone who's trading their strategy consistently and with a lot of success, to look at their metrics and then kind of compare where you're at to where they're at. Once you have that comparison, then you set kind of like, this is my A to B. How do I get there, right? What are the steps I need to take to improve my metrics? Now, to go from making 1,000 a day to 5,000 a day, logically, you have to usually take much larger position sizes and trade more frequently. But to go from a losing trader to a profitable trader, that's where you have to look at more details. Like what are you doing that's producing the outsized losses? So for me, when I pull up my metrics, I could always look at a period of time where I had a poor month. So let's just say this year, the month of March was a little bit tough, as I recall. So we'll pull up March, we'll apply this, we'll click go, and so here we go, right? So now this is giving me data that is actionable. I can take this information and going into the next month, I might decide I should avoid trading stocks over $10 for the time being because it's not producing profit. Or if I looked at time of day, I could say, Mondays and Tuesdays are a little tough for me. That's interesting. I should be more cautious. Or I look at time of day and I see, 6 a.m. is tough and afternoon is tough. Maybe I should focus in on this area here. And I can tell you that I did exactly that going into the month of April. So if you look at my metrics for the month of April, I pivoted. I felt like I had to. I ended up doubling the profit for April, got myself to $45,000. Day of the week was better. I started later and I stopped sooner. I did still have some losses here in this window, but it was better. My accuracy across the board in the days of the week was better. The price range was better. I wouldn't have been able to make those changes if I didn't first see my data. And so it's a big mistake that a lot of traders make to trade without tracking any of this data. So I want to ask you, if you've been trading for a while and you have not yet imported that data to analyze it, do yourself a favor. Spend the $49 for 1 month, import all of those trades and analyze your metrics. What time of day do you make the most money? When do you lose the most money? Those are the themes that you're looking for. When you see that, it's plain as day. It gives you actionable steps that you can take to improve your trading. You then implement those steps for a period of time, a week, a month. You analyze your data after each session and you see, am I seeing progress? And then new things are going to pop out. And of course, it's important to understand the market is dynamic and always changing to a certain degree. Now, I've been trading a momentum strategy for my entire career. So momentum means I'm buying stocks with the belief that they're going to continue their trend. That means I'm a trend trader. So trend traders are typically trading stocks that have breaking news or trading sectors or stocks within sectors that are very strong because of sector-wide news. And we benefit from that kind of rising tide. When the overall market is strong, it often just keeps kind of moving a little higher and a little higher. So that's a strategy that's been around for ultimately forever. Trading momentum, I mean, you could go back 400 years and there are markets where people were chasing momentum. So there's nothing new about that. It's just the way we apply it on a day-to-day basis and make subtle adjustments to accommodate for slight variations in today's market. Okay, so let's jump back to the whiteboard. So step 1 is understanding the phases. Step 2 is learning the basics of how trading works. Step 3 is adopting a strategy, preferably one that's proven profitable by someone else. And step 4 is sim trading, and I'll also note, and analyzing metrics. This is very important. Okay, so now step 5, and perhaps step 5 and step 4 could be interchanged, but I'm going to just leave it as 5. Understanding the right tools to use. So there are a lot of tools that are accessible for beginner traders, and some beginner traders fall into the trap of subscribing to dozens of different tools, which end up costing them a lot of money each month, and it's not really necessary. So I want to walk you through what I would consider to be the bare bones tools required to trade the strategy that I'm trading every single day. So of course we have our simulator. So a sim is a critical tool, and most sims will include level 2 data, which is the depth of market, your time and sales, and charts. Now, the charts included with a lot of simulators are going to be fairly basic. They might not be the most sophisticated charts, but they can do for the time being. Now you can spend more money on more sophisticated charts. Those could be available. Well, for instance, I used to subscribe to eSignal. Those charts are about $185 a month. That's very expensive. I don't subscribe to them anymore because it just doesn't really make sense. Even, I mean, I can afford it, but it's not really the best tool to use. And because a lot of traders want to use the same tool that I'm using because they see, oh, Ross is using this tool, I should use it too. I decided to start using a tool that's a lot cheaper. So we integrated our charts into the platform that we offer at Warrior Trading. So it's all part of your monthly subscription. So you could use that, but you could also use charts for free with E-Trade, Fidelity, or Thinkorswim, and most likely they would be just fine. So you do need some type of charts. You need level 2 and you need a simulator. That's critical. Now, another tool that you need are scanners. You need a news feed, and you need some research tools. So let me walk you through how these work. So with the scanners that I have developed, I built out for my own use, but I also made them available to all of our members. Previously, I was subscribing to a tool that was about, I think it was $225 a month. It was just scanners. It didn't have charts. It didn't have, I don't think it had news. It was just the scans. And although it was good, it was a platform that most traders weren't maximizing all the things that you could do with it. So they were kind of using just the minimum features, including myself, and it felt like I was paying a premium for that. So I made the decision to develop my own custom set of scanners that would be suitable for me and that our members at Warrior Trading could use as well. So those scanners are called the Day Trade Dash platform, and that's what you see right here. And this is the software that I use for my trading. It's web-based software, so it works on Mac and Windows. So we've got all the scanners right here. And what these scanners are doing is they're searching. So SERV right now is our second leading percentage gainer in the market. It's up 187%. Now, this is a stock that I traded. I had some great trades on it, made some money on it. This is the chart right here. So this platform, you could click on the stock and it's going to update the chart so you could switch back and forth. So we'll switch back to serve, SERV. So this makes a really nice big squeeze. And what's interesting about this one, you've got a couple different headlines on it. So the headline was soars 140% after NVIDIA reveals a major stake. All right, that's a big headline for a small cap company like this. So this stock was literally trading under $2, and then the next day it goes up to $9 a share. Well, it's got a big headline with NVIDIA. It's not a surprise. So my process each day of trading, well, first of all, and kind of to go back to that conversation I was having with my friend up in Vermont, what am I doing each day? I'm trading volatility. I'm looking for stuff that's moving. Well, how do you find it? Well, we have these things that are called scanners. And these scanners are searching the market in real time for stocks that are moving. And they've got to be moving quickly. Once a stock hits that scanner, what do I do next? Well, I pull up the chart and I try to figure out what the news is. When I pull up the chart and I look at the news, this gives me context. Now I know that the headline on this is, with NVIDIA. That's a great headline. Now I see the chart and I see that it's clearly trending up. So I'm going to start looking for my entries using the chart patterns that I trade every single day. So this is sort of what I would say is a really great starting point. And this also has the research tools built in because you can go look at more data about the stock. You can see what the float is, the volume, the relative volume. You can look at the high price, the low price. Now, if you want to take it a step further, you can go into the SEC filings that a company will make. So SERV, for instance, I go into the SEC filings and now I can do some research here and better understand some different elements of the company. I could read about the company. I could check their balance sheet, their financials. By checking their financials, I can get a sense of what's their cash position? How much cash do they currently have on hand? Is that position increasing or is it decreasing? So it takes some training to learn how to read these filings. And one of the things that I think all the members at Warrior Trading benefit from is that when I'm trading, I'm broadcasting. So everyone can tune in to my broadcast. And by listening to my broadcast, they're able to piggyback on my educated intuition and on my ability to read these filings, to understand the news, to interpret what I'm seeing, both in the price action and certainly, just in the fundamentals of that particular stock. So number 5 is understanding the right tools to use. The news feed, you've got to understand the news catalyst. You've got to find stocks that are moving. You need some research tools. And for the most part, the research tools in the news feed, you can get generally for free. BAM SEC, there's a free subscription. News feed you can find usually on Google or Yahoo Finance. Scanners you cannot get for free because they include market data. And what's really interesting on market data is that the exchanges have a really strong hold on that market data. They make millions and millions of dollars selling that market data to different individual traders and different big hedge funds. So they do not allow that data to be given away for free. They'll fine people a lot of money if they see people giving away that data for free. So you do have to pay for the scanners and the charts that have real-time market data, but other tools can be free. So then number 6 is setting up the perfect station. And this is a trading station. So when I'm talking about setting up the perfect trading station, it doesn't have to be as complex as everything you see here. This is 1, 2, 3, 4, 5, 6 monitors. 3 computers are powering it. And I've got 3 monitors right here. So 9, so I have 10 monitors right here. But this is what I use, not just for trading. I use this for YouTube, for editing the videos for you guys, for hitting the comments and everything else. So this computer here is a computer that I use for YouTube and social media. And this is the setup that I use for trading. So 5 monitors for trading is a little bit more than what most beginner traders need. So let me walk you through what I would say is a great starting setup for a beginner. I'm going to give you this setup right here. This is a laptop. And right here, you're going to have monitor 1 and monitor 2 on a rack. So you're going to have external monitor 1, external monitor 2, and then you're going to have your laptop screen. Now, some of you are going to say, Ross, what in the world? Are you kidding me? You're trading on a laptop with a little teeny keyboard and a little trackpad? You're right. I am. And I know that that sounds crazy, but you can see that's what I've got right here. And the reason that I like that is because for my workflow, for the way that I'm trading, and I'll just move this computer so you could see it under where the whiteboard is. I like this because I trade so quickly here that when I'm moving around, I want to be able to very quickly move the mouse here like this. So quickly move the mouse, click, and start typing the symbol. So this is the stock that I'm watching. So I type the stock in, and then I'm pressing, shift 1 and shift 2, and I'm adding shares. I'm getting in, I'm getting out. I need all of this to be in a really tight space. I don't want to be reaching over here for an external monitor. This works for me. And it's also kind of leaning in to one of the things that's really nice about trading, which is the fact that you can actually do this from anywhere in the world. So for those of you who have been tuning in for a long time, you've seen me trade from all these different places. And I did that because I was able to bring my laptop with me. So there's no reason to be kind of locked down to one spot. Now, when I'm traveling, I use these external monitors right here. These are, you can see right here, these are really super skinny monitors. If you can see closely, these are USB monitors, and I put 2 of them in my carry-on bag. I put those right next to the laptop, and that's all I need. That's my full trading station. So that's when I'm traveling. However, these monitors are they're 15-inch, they're a little small. So when I'm at home, I like having these 24-inch monitors. They're 24-inch monitors I bought on Amazon. Some of these are from 2013, 2014. I've had them for more than 10 years. They work just great. They're totally fine. So they're not crazy fancy. It's not like a big curved screen or anything like that. It's just a standard 24-inch monitor, and I love it. So now, what do I have on these monitors? So this laptop monitor right here is where I would have, if I were you, a beginner trader, I would have my sim account here. And this is going to have all of your level 2 windows, and it's going to have your order entry window, and it's going to show you your P&L, how much you're up and how much you're down. So this is where you're actually going to have your eye looking most of the time, right at this. Then you have on monitor number 1 right here, the way I do it, and this is just preference, but you could do however you want. So I have watch list stock number 2 and watch list stock number 3 right here. And on this side, I have watch list stock number 1. And then here I have my scanners. So this for me is the perfect workflow. So the most part, my eye is going back and forth between this monitor right here and the stock that I'm watching, which is my primary stock that I'm trading. And then these are my scanners, which show my news feed. So if you actually looked at my monitors, the way they're set up, this one is monitor number 2 right here. This over here is monitor number 1, the external monitor number 1. I've got the S&P 500 on one chart, and this is a 10-second, a 1-minute, a 5-minute, and a daily chart for these time frames. If you're not familiar with these types of candlestick charts, you could check out my full-length episode on how to read candlestick charts from zero. I think you'll appreciate that a lot. And then this is a second stock where I have 4 different time frames as well. The 10-second, the 1-minute, the 5-minute, and the daily. So those are over there on the side. So I glance over at those, I keep an eye on them, and that for me is enough. Now, as you can see with this trading station, I also have this monitor up here in the corner, and this is an exact copy of monitor number 1. So it's except with 2 other stocks. So that's the way I've got mine set up right now, is I've got this additional monitor up here, which has watch list stock 4, watch list 4, and watch list 5. So having more monitors means you can watch a couple more stocks. And then on this side here, this is where I actually have my my metrics. So I have my metrics up on this screen here, which it's kind of, I don't really use it that much for trading. But anyways, I just have it. And it's kind of symmetrically balanced to have that monitor there anyways. So that's the way I have it set up. And I think for me, this is a really great setup. And like, just as an example, when we had the pandemic in 2020, I was working in a nice office where I had, you know, similar setup like this, 10, 12 monitors, the whole thing set up. And then, you know, we had the lockdown. So I was like, well, I guess I'm going to just move home. And so that's when I moved back here and set up back in my house. And I brought home 1 laptop and 2 monitors. And that was it. And that was all I used for a long time. And then I added a 3rd one. And then I added a 4th one. And then eventually I brought the whole station home. And, you know, I've been working here at home now for 4+ years. And actually, it's great. I enjoy it. But all that was to say that when I came back, I was like, you know, I'm actually almost in some ways doing better with less. Maybe all those monitors were sort of a distraction, and sort of condensing down just to the most important tools for me was really helpful. So it's the most important things that I need on each one of these monitors, the most important indicators, the most important research tools. I mean, all of it is like, I just want what I absolutely need each day for trading. And the same goes for when I'm on my traveling trading station. I'm not going to bring, you know, I'm not going to put something like this in my carry-on bag. It's crazy. It's not necessary. But at the same time, I'm going to be honest, 1 laptop screen is not enough. It's not enough. With 1 laptop screen, unless you had a 52 or 55-inch screen, it's just not enough. There's too much stuff that you need to be able to monitor while you're trading. So use the space. It's going to cost $100 or whatever it is to buy one of these monitors, 125, but it's money well spent. So even if you don't get the stand, you just prop it up against something, whatever you do is fine, but get yourself a couple external monitors. And my opinion is the nice thing about the laptop is that it's something you can bring with you wherever you go. So you get the laptop, you got a couple external monitors, now you're on the go. All right, so I think I've given you a pretty good explanation of setting up what I would call the perfect station. So I would say, again, a minimum of 3 monitors, but you know, you do as you'd like. Number 7. Okay, number 7 is discipline. I'm so bad at spelling when I'm talking. So with discipline, this is one of the biggest challenges for beginner traders. So challenging for me, even I sometimes struggle, as we see, to spell it. So here's the thing with discipline. Remember how I said that I can consolidate all the reasons for failure down really to two big reasons. There are a couple others that I'll mention in a moment. I also want to share with you, by the way, some recommended reading that I think will be really helpful for you as an aspiring trader as you're getting started. So I'll share some recommended reading with you in a moment as well. But number 7 is discipline. So the number one cause of failure for beginner traders is that they are trading without a strategy. They have no strategy. They're shooting from the hip. So it's no surprise that they're inconsistent. They don't have a set of rules they're following, et cetera, et cetera. The number 2 reason that traders will fail, they have a strategy. They've gone through this for the most part. They've set up a trading station. They're using the right tools. Maybe they sim traded, maybe not. They've adopted a strategy. They understand how trading works. They're going through the phases, but right here, they don't have the discipline to follow the rules. And if I give you the rules, but you choose not to follow them, you cannot expect to do well because you're deviating from the plan. And this is, for me, it's really frustrating when I see it because I'll give you the rules. Download it, right? Go into the description, the pinned comment, download my small account strategy PDF. I'm giving you the blueprint. I'm putting it right there for you. I'm leading you to water, but I can't trade for you. I can't trade for you. And by the way, just as a PSA, so you know, there's a lot of people out there that will make claims that, hey, all you have to do is blindly follow my alerts, this and that. That's not a recipe for long-term success. I want to teach you how to be self-sufficient. I want to teach you how to find the right stocks to trade each day. And so for what it's worth, for the members at Warrior Trading who have done really well, and as always, results are not typical, but for those who have done well, I've got our success stories page here. We're not a broker dealer, as you probably know. So we don't have access to the records of all of our members at Warrior Trading. But we do have a system where people can voluntarily submit broker statements and verify their profitability and earn a badge. And so some of these badge holders like Max and Manoli, Hamong, who have 100K, 500K, $2.5 million badges, these are not traders who are blindly following me nor anyone else. These are traders who have developed the strategy, who have learned my strategy and have proven they can trade it profitably on their own. And they may have made, some minor adjustments to it based on their, what their risk profile and this and that. But I want you just to kind of have that big picture understanding that success in trading will not come just from blindly following someone else. It doesn't work that way. And no one like me is going to trade on your behalf. The only way someone else can trade your money is if they're a licensed financial advisor and you have to be an accredited investor to invest in a hedge fund, which means you need to have at least $2 million. So no one like me is going to be able to trade for you on your behalf. We can teach you how to trade. We can teach you what works for us, but you've got to be the one who actually is taking the trades. And so as I teach you the strategy and I give you the rules, that's what I'm putting out. And what I need from you is to show that you can have the dedication, the discipline, and the drive to follow those rules. And so it's super disappointing when I see a trader who's a chronic rule breaker. They keep deviating from the rules. So let me give you an example of one of the rules that we follow in trading. When we're trading, we have to have what's called a max loss. So I set a max loss on my account of daily goal times 1. That's my max loss. My daily goal is, I'll just make that 5,000. So $5,000 is my daily goal. So my max loss is $5,000. So my weekly goal, for what it's worth, weekly goal is daily times 3. So the way I figure it is Monday, let's say I'm up $5,000. Tuesday, I'm up another $5,000. Wednesday, I lose $5,000. I have a max loss day. But then Thursday, I'm back up $5,000, and Friday, I'm back up $5,000. So these 2 days cancel each other out, which leaves me with $15,000 on the week. $15,000 on the week, approximately $60,000 on the month, $720K more or less on the year. That for me is a pretty nice year. Now I'll have some years where I'm way above it. I'll have some years where I'm below it, but that's the way I think of it. Now, if I have 5K as my max loss and I go down 5,000, I have to stop trading. I can't let myself have days where I'm up 5K, 5K, and then I'm down 50K, and then I'm up 5K, 5K. These are the days where you're going to learn the hard way, if you're not willing to listen to the rules, that days like this will end your career. You have to be able to cap your losses. Now, we don't want to cap our upside. When the market's hot and I'm up 5K, I won't stop trading. I will keep trading until I have given back. I'll show you. This is how I do it. So my first goal on the day is $1,000 of profit. So when I start each day at 0, that's when I carry the most risk, because I could go red, and I don't want to go red if I can. So until I'm up over $1,000, I trade with about a quarter of my full position size. So that means these first few trades are with small size. So if I go red, I'm usually only going red 1,500 or 2,000 or 3,000 at the most. I'm not going down 10, 15,000. Once I'm up more than 1,000, once I've unlocked by breaking over this level, big share size, now I start to step up and take bigger risks. This is where I make my way up to, 5K. Oops, sorry. So 5K right here, and I'll keep trading. But something that's very important is that if I give back half of my profit on the day after crossing my goal, this is a cue to walk away. So if I give back half my profit, I have to walk away. Absolutely have to. And typically I say, if I give back 20%, it's a good indicator that I should walk. So that means I'll keep trading until, I've kind of had these 2 losses like this, and then that's the spot to walk. I've seen traders who've had days where they went like this and then they go all the way back down to red. And you've got to learn when to walk away. It's part of a system. So being disciplined as a trader means you become systematic in the way you trade. It's not that you're trading with an absence of emotion, but you're so focused on following the rules, it takes emotion out of it, because all I'm doing here is following the rules. And if I follow the rules, I know that there'll be some days where I end in the red, but the losses are manageable. Most days I'll finish in the green. Some days I'll go up 10, 15,000, then I'll give back half, and I say, well, I've got to walk away here. I guess I pushed my luck, but at least it's a green day. And I've watched different traders follow different paths. Some traders take the approach of, I'm going to trade without any rules at all. If the market's hot, I'm just going to keep trading. No matter how red I go, I'm just going to keep trading. And what I've seen is that traders that don't sort of restrain themselves will end up having some really big outsized days. Some of them will be green, but a lot of them will be red. And those big swings can be really emotional. And once you get emotionally triggered, it's really hard to maintain discipline. So discipline is about state of mind, keeping yourself in a calm, cool, collected state of mind. We're not sprinting for a finish. This is a marathon. You got to settle in. You got to pace yourself. So here's an example. I know a trader who had a goal of having a $500,000 year, having a really big green year, which is great. It's always nice to have a really big green year, but it may or may not happen. So the way you get to $500,000 of profit on the year, we have about 250 trading days each year. So if you are averaging 2,000 a day, that'll be 500 grand. Now, the thing that's really interesting is that this trader is regularly having $4,000 and $5,000 green days routinely. So they're doing really well. They're far exceeding, but they chronically are having days where they're going down $8,000 and $10,000. And these $8,000 and $10,000 red days, it's pulling down the average. So instead of averaging $2,000 a day, after you take away all these big red days, they're only averaging like $1,200 a day, right? Now, I'm not saying $1,200 a day is not great. That's going to have them on track for, $300,000 a year. But if you want to get to that 500K mark, it's not about making more money on the green days. It honestly isn't. It's about losing less on the days that are bad. And this is a really interesting topic that I had with some of my successful students. I've got this one student, Jess. He said, we asked him, what was your turning point? We did an interview together. I said, what was your turning point? And he said, I don't really recall a turning point, right? I think he had the experience of going through, phase one, kind of break even, and then this sort of slow ascension back up here. So his progression through to, P5, phase 5. So we had phase 1, sort of learning curve. Phase 2, going sideways. Phase 3, starting to make a little progress. Phase 4, having that sort of first setback and then recovering from it. Let's just say right around there. But he said, I don't really recall like, oh, it was this day that I implemented these, 1, 2, 3 changes that changed it all for me. Once I did that, it was like smooth sailing. For him, he said, it just felt like I started sucking a little bit less. I thought that was really interesting. So he was like, I still had red days. They were just a little farther apart when I would have them, right? So they were just a little more spaced apart when I would have those big red days. And that was kind of the difference. And, I think that there's a lot to be said for that. It can be very subtle, that shift. Now, for me, my turning point was a lot more concrete to an event, because what happened for me was I had a day where so mine looks more like this, where I was going sideways like this, and after a sort of bigger drop like that became where I was basically at all-time lows. That became for me the catalyst to look at my metrics really closely and ask myself some hard questions. And that's when I said, what are you doing right now that's working? Because this is in total not working. And that's when I said, all right, wait a second. This is the price stock that's working really well for me. This is the time of day that's working really well for me. It was like 9:30 to 10:30. And I thought, even if I only trade for an hour a day, but, I could just take 2 good trades, 3 good trades, that could be my turning point. And then I had a 6-month period where I was stair-stepping up. And then I remember in one day I had a big drop back down, and I looked back at my metrics and I said, you know what, Ross? You're the same person who just did this. You had a lapse. You had a momentary lapse of judgment that results in that loss. You could do that again. And I did it again. Except the next time I didn't stop till my account was at 100K. And that was like a really big moment for me. And this happened within about 12 months. This was like 2 years into trading. So I was at about the 24-month point right here when this moment happened. A little bit of beginner's luck in the first year, ran out in the second year, then had this big drop, then had a nice recovery, 6 months, dropped down, and then the next 6 months got myself back up to here. So from implementing these changes here to this was about a year. And look, some of you guys are going to say, wow, Ross, sounds like learning how to trade starting from zero is going to take 6 months, a year, maybe longer. I hate to break it to you, but it's going to take some time. It doesn't happen overnight. And it requires a high degree of dedication, discipline, and drive. But if you have that, if you're really driven and you're willing to just make incremental progress, like learning a little bit each day, watching my recaps, watching YouTube videos just like this, reading some books, right? That incremental progress, it's all going to filter down and add to your educated intuition. One of the things I'm a big advocate of is trying to trade a little bit every day. So if you could trade a little bit every day, in a cash account with just a small 10 shares, just to gain that experience. Of course, in a simulator is better, but just keep gaining experience. Because here's the cool thing. The market's going to be here. So you could spend the next 5 years saying, I'll wait till I have more time. Or you could spend the next 5 years learning a little bit each day while you continue doing other things. Think about where you'll be. It's going to be a big difference. So now let's talk about some of the books that are on my reading list. So one that I'll start with here that I think is great for beginners is The Happiness Advantage. This is by Sean Acor, and this talks about attitude. It's about you've got to have the attitude to get through the learning curve because it's so emotionally difficult. Attitude really does make the difference. Another book, Annie Duke, Thinking in Bets. This is a great book. She's a professional poker player. And although poker is certainly different from trading, there are areas of thinking in bets that I think this really does align with the type of stuff that we're talking about pretty much every single day. Another book here by Annie Duke, Quit, The Power of Knowing When to Walk Away. This is a really good one. I do have my own book if you haven't read it. It's on Amazon, How to Day Trade the Plain Truth. This is a book that is much more conversational. I have the audiobook so you could listen to it if you'd like. This talks about the guardrails that help keep me in line. Learning how to trade kind of is like learning how to ride a bike with training wheels on. You got to keep yourself safe. So I talk about some of those steps that I've taken in my trading. So, and then one last book that I think is really helpful on the emotional side is this book called Trade Mindfully by Gary Dayton, because there's no question that emotion is a huge factor. In fact, when we're looking at our list here of the 7 steps to becoming a trader, they're not weighted equally. It's just not the way it works. I mean, obviously understanding phases is important, but that's not nearly as important as having discipline. Understanding how trading works, yes, that's foundational concepts. You've got to have that, but like discipline is a huge one. This is really huge. And of course, adopting a strategy is really important. So I really would encourage you to do some work on the discipline side of trading, because I think you're going to find sooner or later that you'll be faced with the big emotion that comes with having a big trade. It could be a big winner, but more likely a big loser. And now you're faced with, okay, I've dug myself a hole, right? I was having a nice run, whatever it was, like I was, in this period here where I had this nice leg up, and then boom, I give it all back in one day. It's like, how could I lose 30 grand in one day? How could I be so stupid? All this self-doubt comes in. Oh my gosh, maybe this is the place I'm going to give up. And then how do you get yourself back on the horse? So a certain degree of it is the ability to give yourself that pep talk, that self-talk, to be your own biggest advocate. And a lot of that does come from looking at data. The data is going to tell you, what you're doing when you follow the rules. When you break the rules, that's when we have problems. Stop breaking the rules. And the pain becomes so great from breaking the rules at a certain point that most people will stop. But we know that that's not true for everyone. There are some people that even in the face of this pain will continue to make really bad decisions, and they'll continue to lose money. And that's one of the biggest risks with trading. I often say there's a blessing and a curse with trading. The curse is that you could spend 2 years struggling to make just $10 a day. And you're not trying to be greedy. You're not trying to fly in a private jet or drive a fancy car. $10 a day. Just enough for, whatever, something small. And you could spend 2 years not able to do it consistently. And then the blessing is that once you're consistently making $10 a day, $10 a day. All right, let's say you're doing $10 a day trading with 10 shares. All right, now, let's just say you're doing it with 100 shares. Doesn't matter. So that's 10 cents. That's 10 cents per share. So now what if you increase your share size to 1,000? Holy smokes. Would we actually go to $100 a day? Well, maybe we don't go from 100 to 1,000 in one jump, but what if you did? What if you went to 10,000? Because if your strategy is consistent and it's working, 10 cents, 10 cents, 10 cents, it's the same trade. The only difference is your position size. And that's when trading gets really exciting. And that's where I've seen some traders who have really excelled, who have done really well, because they first set the foundation. They learn the 7 steps for success. They follow the steps. They've got the discipline to follow the rules. And then they scale their strategy. So I guess you could say step 8 is scaling, but really these are the 7 steps for getting started. I hope that this has been really educational for you. If it has, please hit that thumbs up, subscribe to the channel for more episodes on trading strategy just like this. And I'll remind you, as always, that trading is risky. My results aren't typical, so manage your risk by practicing in a simulator, especially when you're learning a new strategy. If you didn't already download my small account strategy PDF, link is in the description, pinned at the top of the comments, and I'll see you for the next episode real soon. Thanks as always for tuning in.